Morning, everybody. Thanks for joining me. It's April 12th, 2024. Let's talk about what's going on with mortgage interest rates. Right now, we are not getting help from anybody on long-term interest rates. Nothing to suggest that rates are going to come down within the next couple of months, to be honest. We're not getting help with inflation. We're not getting help with the jobs creations. Fed's drawing back on their Fed cuts, holding back. Looks June might be slim chance of getting the first cut. Who knows on short-term interest rates, but not expecting it at this point. So nothing helping us with long-term interest rates right now. And you can see that in the MBS charts this week, which I'll show you at the end of the report. But let's start with poking some holes in the data, because a lot of people talking about how good the economy looks, but not doing a deep dive into the numbers. And there are holes in the number. And let's start specifically with the jobs reports. Part of our jobs reports does not account for the fact that we have about 4.2 million illegal aliens that came into the country between 2022 and 2023. Only 1.2 million of those people received an actual visa. So that means we have about 3 million illegal aliens that are contributing to our economy. What I mean by that is that they have to buy consumer goods and services. They're buying groceries, so they help prop up our economy by spending. And there's no way for retailers to discern who's spending in their stores, whether it's an illegal alien versus a U.S. citizen. So it does prop up our economy to have them spending. The problem, though, is they aren't really properly reflected in the jobs reports, because many of them work on a work visa, which means they'll show up as a job creation, particularly in leisure and hospitality. That's where they tend to go to, but they're not showing up in the hours worked. So when you look at the GDP, and you're taking a look at the fact that consumer spending divided by the hours worked, that number is going to be a little conflated, because you're getting the benefit of the spending, which can't discern between illegal alien spending and U.S. citizen spending, to the fact that their hours are not considered into that number. So it's a lower number than what's actually being worked, which thus creates a higher GDP number. So again, there is some weaknesses in these reports that's not being considered. CPI, another thing that hurt us this week, inflation not coming down. And I will tell you, over the next couple of months, nothing to suggest that we will see inflation come down. May hold steady and most likely go up a little bit, just based on the year-over-year numbers. Within this report, you can see the headline number up 3.2% to 3.5%, and the core number fortunately remained unchanged. But again, the Fed's motivation is to see inflation come down. So if that core number is not moving, that's not good for us. Some of the factors still contributing to these inflation numbers, always within the core, is the shelter component continuing to be stubborn. But motor vehicle insurance, a big problem right now, that up 22% year over year. And I think a lot of people see that in insurance. And a lot of people see it in their homeowners insurance, but homeowners insurance is not part of CPI, interestingly enough. Only auto insurance is. The only thing that's considered as it relates to homeowners insurance in the CPI number for shelter is actually renters insurance costs. So I do know, having talked to several people, that homeowners insurance is a pain point right now for a lot of people, as well as motor vehicle. But within the headline number, uptick in gasoline prices and uptick in food month over month, both those numbers. And, they're waiting within these reports is what really impacts these numbers. If they have enough of a contribution to the weighting, that does make inflation go up, our CPI numbers go up. So just something to consider there. Also, this week, we did get mortgage applications. And what's very interesting, while purchases went down 5%, refinances went up 10%. Now, this is not a true indicator of the strength of the economy, but I do believe that this is an indicator to the pain that some people are experiencing with this in this economy. Because if you are considering a refinance at 7% plus to cash out and consolidate debt, that speaks to the fact that you're probably struggling, and this is really something that's going to benefit you. So it's good to have that opportunity, but I do think it speaks to the economy as well. While it's not a true indicator to me, I do think this reflects on the overall consumer at this point and the challenges they are facing because short-term interest rates are so high. Their credit card bills are expensive. Trying to finance a car loan is expensive. Equity payments going up. All impacts our consumers. Jobless claims did show that initial jobless claims, those filing for the first time, down 11,000, but continuing up 28,000. So again, this does speak to the fact that those people that have been let go are having difficulty finding a similar job. And do remember, when we see these job creations, the predominant jobs created come from additional work, part-time work, gig economy type work, not from full-time employment. So this does speak to the challenges people are having in finding new full-time work. Also this week, there was more information about the NAR settlement. The DOJ stepping in saying they might want to make some changes to this. I do not think this is important, but I'll tell you what's going on right now. The original lawsuit indicated that the buyer's commission could not be listed on the MLS. Not a big deal because there are plenty of workarounds for that. You could list it anywhere on the internet, realtor.com, Zillow.com, on your own web page. But what the DOJ is saying now is that, no, I don't think we're going to allow that at all. You can't list it anywhere. Again, this is kind of a no-brainer for me. All this means is that you're going to pick up the phone and you're going to call the listing agent and say, hey, what's the buyer's agent comp going to be and who's going to pay it? It's a simple 1-minute conversation, to be honest. So this to me is not a big talking point at this point. And I don't think this settlement is going to have as much impact as we thought. I think really, my opinion only is just that it's going to impact first-time home buyers the most, and that's about it. But we'll see how this all plays out because we don't have anything. There's no finalization on this until July at this point. All right, so let's look at the MBS markets. As you can see, it's been a trend down over the past several weeks, and this Wednesday was pretty painful when the CPI numbers came out. 100 basis point change in the MBS market that day. We did have at least 3 rate changes that day for the worse. So right now we're just going to spend our time climbing back out of that. We've probably made up about 20 basis points at this point, and need to make up about 80 more just to just to get even with Wednesday at this point. So market's not doing very well for us. Interest rates definitely are a little bit higher, but still, I'm not going to dissuade you from purchasing. It is a good time to purchase because you don't have competition right now. You have more leverage as a buyer that you're going to have later on, and good to get in the house now while the home value is lower as opposed to what it will be in 6 months to a year's time, because we do continue to see home appreciation. All right, if you have any questions, please reach out to me. Thanks for watching. I do hope that you like my videos and add any comments too. What do you think? What are you seeing as holes in the data? What are your thoughts on the overall economy as a whole? I'd love to hear your opinion. Otherwise, enjoy the weather. It's going to be amazing this week here in Colorado. Have a great weekend. See you next week.